Shimon, and welcome to episode 1 of my Back to YouTube Spectacular. Now this is of course a Halloween episode, and we've had a bit of a horror show of a month price-wise. Throughout the majority of October there has barely been a single valid entry for me personally, and with about 6 trades in total throughout the first 3 weeks of October. And yes, it was worrying, it was frightening, it was scary. I kept telling everybody to be patient and that the trades will always come. But even I was starting to doubt it this month. But just as all hope was almost gone, the end of October brought a shining light of beautiful price action and saved us from the depths of low profitability. So yes, patience once again prevailed. Now in terms of psychology, the patience and trade drought can do funny things to the mind. Luckily at MagicFX we have our resident psychology master David to keep us all calm with a live Zoom session at the end of every month. Here now is an excerpt from this month's session where he talks to a member about fear of entering trades. So check it out.
Yeah. So we already know that you're good at risk management, so that's not an issue. So taking trades you shouldn't be fearful of taking trades, and you've got the data there that proves that if you can execute your edge flawlessly, which are those trades that present themselves, then and you take all of them, then you should you've got a profitable edge.
Yeah.
But because you're questioning yourself when you take coming to take a trade, you're skewing the edge out of your favor, which I know you know that.
God, this isn't looking good for my trade, sorry.
Whoa.
130 news spike there.
Yeah.
But yeah, so you've either got to, it's either because you're still risking too much on a trade, so you've either got to lower your risk down, or you've got to give yourself, like I've got to take every trade for the next 20 trades and either have a reduced risk so that you'll know that you're only going to lose 5% or something of your total account over those 20 trades if you take them all, and then build the self-confidence up in executing the edge every single time it appears and you're at the computer to take it. That's really the only way that you're going to overcome that fear, is by executing the edge and then sort of numbing yourself to actually taking the trades. Because one thing that I found for myself earlier in the year for me was the way I was trading at the beginning of the year, I wasn't getting that many setups. So for me, I've realized that because I wasn't getting enough setups in terms of like my edge wasn't presenting enough, I was getting I wasn't staying as sharp when I was executing because there was time between my edge setting up. So I looked at ways that I could provide myself with more opportunity so that open the variables up slightly to give me more opportunity. But in terms of execution, I tightened the criteria up so that I was more strict on the criteria of actually how to enter. But so basically what I did was I had more setups presented, but I was more strict on execution. So that meant that I was only still getting into like a similar number of trades, but I was being presented more options to get into a trade and execute, because I felt that I was at a point in like my trading where I needed to push myself a little bit more. So it's that fine line of you've got to push yourself out of your comfort zone of taking these trades to get comfortable with taking them. It sounds a bit counterintuitive, but like with what you've just told me, like you're not going to blow your account up. So like just keep doing what you're doing. And then, yeah, I'd say either reduce your risk so that you've literally like it's not affecting you when you're taking the trade. What you've got to realize is that if you go through that process where you're using reduced risk, is when you dial your risk back up again because you've got confidence in executing it. You need to be telling yourself when you do it, going through that process, that I'm executing this, even if you don't use 1%, like, oh yeah, I've got 1% risk on here. I've got 1% risk on here. It's all right. It's okay. Because you need to build that subconscious in your mind that you're risking the percentage you want to risk. Because when you get comfortable at executing at a lower risk, pushing yourself up to the next point and to the next risk up, you're then going to feel the other problems that we face in terms of, because you've got the more risk on, so you're seeing like bigger numbers on the screen. So we've got to be thinking one step ahead to prime ourselves for what the next challenge is going to be. So, for instance, at the moment, we need to solve you making sure that we're executing your edge every time it appears, because we know that if you do that, you're going to be profitable, and you're not going to negate taking stupid trades. We're still going to take stupid trades, but not taking all the ones that we should do is where really we need to be maximizing our potential as traders, because that's where we have most control. We don't have control over anything else, but we have control of execution.
Hee. Now I'm going to end this first episode with a look towards price as we go into November to give you a breakdown of the market through the Magic lens. So in this outlook, we're going to be starting by looking at the 12-month time frame, which I know is huge, but in order to actually get a look at the overall picture nowadays, we have to go that big because price has gone to the lowest points it's been since the early 2000s. So as you can see on the yearly time frame, price is actually bullish still. So we can see we have a low, a high, a low, a high, a low, a high. We're pulling back. We've reached actually this extreme zone right here. And now we may get some kind of reaction to it. We'll have to wait and see. But because this is an extreme zone, it's a yearly zone, we would expect some kind at least of reaction to it, some kind of bullish reaction. So that's kind of what we can see on the yearly. Now, I would just quickly make a note that this low here failed to tap anything to the left. For me, that's just tapped imbalance, not a valid demand zone. So I would actually consider that we could sweep this low at some point and actually come lower into either this little wick here or this zone down here. But that could take years to happen. So regardless, I would still expect some kind of reaction from here, even if it doesn't fully go on to break this high over here, which again would take years and years and years to happen anyway, even if it did. Yeah, bullish reaction from here is likely. So, okay. Also to note, this isn't a surprise that prices come down this low. If we're looking purely from a price action perspective, it makes sense that we pull back to the extreme. You can see every time if we put a premium discount tool on, we've pushed up, we've pulled back, we've pushed up, we've pulled back to this discount, we've pushed up now, and look what we're doing, we're pulling back into here. So it's no surprise, but it's always, it feels like we've been bearish for a long time because we have. It's been going down, and that's just, this would also have felt the same way. Okay. Now, if we then carry on into the monthly, we can get a sort of closer look into what's going on here. If I just clear up some of these markings, what we can see is that we also have monthly swing structure here. We have major swing structure between this low and this high, which is the same as the yearly. So that's very interesting. Now within the major swing structure, we also have minor swing structure. And if you want to know more about swing structure and how we mark it, look at my videos on the subject. We have part 1 and part 2 of that. And it's a great way to have a simple rule-based way of marking structure that always makes sense. So yeah, check that out if you want that to add to your toolkit of trading. But now what we will look at is the minor structure within this major leg of price, and what you can see is we have this low, this high, this low, this high, this low, this high, this low, and finally this high before price then went on to pull back, break structure to the downside and turn bearish. Okay, so what we can see here is that we had this first leg of price and it was left unmitigated. The discount here was left unmitigated. So that's our first sign that when price started to pull back after this major break of structure here, that we would need to come back to mitigate this unmitigated discount down here. So again, no surprise that we've come all this way. And then price went on to pull back, to push up, pull back, and we did mitigate the discount of this next leg, and then continued on. So again, no surprise that price didn't need anything from here, and it's just sort of broken straight through this low because it was a mitigated area. So now what could we expect? Well, we could look at zones within here to expect that bullish reaction. And basically you want to refine down on the monthly, the weekly, the daily, 4 hour, as far back as you can go to and still actually look at this area. You probably won't get much further than the daily with that. But in terms of expecting a bullish reaction from here, it certainly wouldn't surprise me to get that. Now we're in this zone. We're certainly overdue some bullish price. Looking at this as well, what we can see is as we've come down, we created some minor structure here on the monthly, and then this failed to mitigate this premium. So even if this area doesn't give us the push that ultimately goes on to break major structure, what it could do is, if we were to continue on mitigating something valid, we could get a push up into this unmitigated premium before pushing down again if price does want to continue down. That is certainly a pattern we could look at happening. This could well be liquidity or inducement, and that is how I view, lows, for goodness sake, lows or highs that either fail to mitigate the previous premium or discount, or fail to mitigate a valid zone in there, okay, is likely to be future inducement. So that's kind of the monthly outlook. Overall, expecting price to come into something in here. Now what I'll do is go back to forex.com, because this is FXCM, which goes back further. I'll go to forex.com, which has my more recent markings on. So we're on the daily now on forex.com. This is where I've got my markings. You can see, obviously, we've been very bearish on the daily coming down. Price has created some nice major order flow coming down here previously. Created some minor structure, swept the minor structure, continued the major order flow. Came up here. Now, this just missed that premium there, the EQ. It literally missed by a couple of ticks before continuing down. So, you could consider that order flow, but it is a little bit sus. At some point, price could sweep that and get a reaction from it. But again, this is the daily, so that could be in a couple months' time at least. But then continuing on from there, this is a little bit tricky, this bit of price action. There was actually no cemented low in here, which threw a few people off, I know. So from this high to this low is actually where the leg of price is. Then price came up, mitigated this zone here and continued down. So we had major structure again. Now what's happened is we've pushed down, we pushed up, created some substructure on the daily, and we've broken that high again. And now we've tapped into what is ultimately this extreme zone. Not the cleanest. I would prefer overall that we tapped into this wick. However, you could certainly say that we've tapped into a weekly zone, which is this big wick here. And you could reasonably say that we tapped into a daily zone, somewhat sweeping this high here. And now also something to look for is if we cement this daily high here, if this candle closes today, below the candle to its left, that signifies the start of at least a substructural pullback, because we have this last bit of price and we expect it to come down here. If it's going to continue up, we'd expect it to come down into this discount before doing so. If it's going to continue down, then these lows are weak and we could expect it to push through. So unless it reacts to a significant zone in this area, the expectation is for it to continue pushing down, and to take shorts is valid. In order to find those zones, we go to the lower time frames and find them down. I teach you how to do that in the MagicFX Academy. To find the most high probability zones that will do that. In this case, yes, I would certainly consider price has had some bearish momentum kicking in. At the start of November, we have FOMC, so that's this Wednesday. We have NFP on Friday, and that's going to be very interesting to give us a general sense of the direction in which price is going to go from here, whether we are going to continue down to break these lows or continue this substructural trend up and maybe come up to mitigate something up here. We need to be aware that we are in that monthly zone that we showed earlier. So that could be the trigger for perhaps a bullish move from these news announcements. We will have to wait and see. Now I'm just going to briefly go on the 15-minute and kind of show you why for me this month was a little bit tricky in terms of price action, particularly the past couple of weeks, and show you how it is that it cleared up. So for me, as you know, we have major and minor structure, and I like to really trade from major structure. I do trade 15-minute minor structure, but major structure is what I do overall like to see, because it shows that there's valid order flow there. Now you can see earlier in the month, around the 17th or in the middle of the month, you know, that there was obviously some very messy price action here. We had this major break of structure. We then had this very sideways move here. This was of an afternoon where then price pushed down, failed to mitigate quite clearly this discount area before pushing up, and then it broke down again, failed to mitigate anything in this discount before pushing up, and then came down, did mitigate something, had a little reaction, and then continued to break down and break this low, and then had again a sweep of this high. So it's breaking lows, failing to mitigate, sweeping highs over here, moving very sideways overall. You can just see there's all these kind of breaks up and down, and it's just price that's going to catch you out unless you're very conservative with how you get involved in entries. And for me, I stayed out of a lot of this price action just because, well, I mean, almost luckily for me, the 1 minute entries and things like that just didn't line up for me and didn't make sense to get involved in. And that is when it is quite important to be conservative and be picky with where and why you get involved in price, and it has to have that logic to it. So that is very key. Now, what we then did was to explain kind of this price action. What you can see is that this low tapped nothing to the left, and as I mentioned previously, if something doesn't tap a valid demand or supply zone, I tend to assume that's going to be inducement at some point. As you can see here, that inducement was swept by this little wick here. Now, what you can also see is that the sweep also tapped nothing, but then continued to push up. But the sweep itself does show some strength in this case. So it swept, it cemented the low, and then pushed up and broke the major structure. So now you could say that we have some re-established order flow here. And so now at this point, I was hoping for price to continue being clean and for a continued mitigation of something valid in this major discount. Now again, price came down to just above this discount and then continued on. So for me again, I wasn't looking for longs here, even though this may have looked to, you know, other strategies, a lot of you guys maybe, that very valid for longs. It may have been good for other strategies. For me, I'm not getting involved here because it doesn't fit my plan to get involved long in this area. So again, failed to mitigate the discount, pushed up. We now have a minor leg. Again, look, this is just a horrible New York session where price just moved sideways, and this happened a lot this month. And there's just nothing you can really get from this. And then, okay, again, I'm expecting price to come down before pushing up. So there was no long entry for me to get involved in this bullish run. So now we have major structure break, a failure to mitigate the discount, so we have a minor structure break, a failure to mitigate the minor structure. So this could make you laugh, but this is now a minor structure. And so it's like, right, okay, we push up again and we'll carry on marking the high and the lowest point before the break. And now we have our minor discount. Now again, what happened here, typical this month, failed to mitigate the discount before then pushing up and breaking structure. So again, for me, wasn't a valid long. Also tapped just nothing to the left. So again, I'm sitting this out. This is how I took so few trades this month. So looking at this, because we've failed to mitigate the minor discount and then pushed up again, it's now a minor break of structure. And then what happened again is we had this next leg of price. We cemented the high here, failed again to mitigate this minor discount. So it's now minor. Okay, now the next part is where price cleaned up because we have something called re-establishment of order flow, or ROF, or ROF, which is very valuable because it determines the strength of a break of structure. So here, in this last leg of price, the minor, right there, you can see we finally mitigated the discount before breaking structure. So we're now re-established the order flow, we're back to major structure, and then we get a bearish major break of the low. So now, shorts are very high probability for me, especially because we've got all this unmitigated non-order flow to the left. And so I knew there were areas that prices needed to go. So not only here did we get a bearish 15-minute major breaker structure, we also got a 4-hour cemented high. So that tells us we're getting a 4-hour pullback at least. So again, another confluence. So once we had this, we also, as you can see, we had some nice order flow on the 15-minute. You can see we came in here, we pushed up, tapped in here around Frankfurt Open, then pushed down, and there was the possibility of getting involved in shorts here. Again, right here, the next, well, it's the same day, price pushed up into this premium area, also a valid zone, and gave opportunities to get in short again. And so, you know, this is where price cleaned up towards the end of the month. We pushed up again, failed to mitigate this premium, so it's like, right, okay, fair enough, but had this nice continued push down. We were expecting price to keep moving down, so holding shorts from here was great as well. And then again, we had some more valid order flow where price came up to this extreme zone and broke down again. So again, shorts valid from here. And one more time, we created minor structure, we failed to mitigate this, but then again, we have this next leg of price, and price comes up, taps into this valid zone and pushes down, again giving valid entries from here on the 1 minute. Okay, so we had nice price action towards the end of October, which is great, which is what we want to see. And I've talked for way too long with this outlook. I hope that was useful and valuable, and gives you some idea of what to look for in November. And I'll see you next time.